good afternoon, everybody. Jeff Gibby here. Gonna have the pleasure of reading a legal introduction and, you know, all that kind of good stuff. Welcome. Welcome to the class. If you're having problems hearing me, let me know. We did do a little bit of an audio test a little bit earlier, and it worked pretty well. As many of you know, the favorite part of my job is to work with our partners, and TraderMaker Pro is the example of a brand new add-on that we've released that we're pretty happy with. And today's class is kind of designed to give you a look at it and let you see what's going on with it and all that kind of good stuff. So let's go ahead and get started. Steve and I have been working together for a number of months now. I think we started talking and working pretty closely with each other back in June of last year. And we've pulled together a lot of what he knows into a MetaStock add-on. He runs a web service or a website called TraderMaker.com. He does tons and tons of really good webinars. He really knows a lot about support and resistance, and we're pretty proud of the work we've done with him. So what I'm going to do is I'm going to go ahead and switch to his PowerPoint so he can kind of go through everything, and I'm going to turn the time over to him. So give me just a couple seconds and we'll pull him back on.
Well, thanks to Jeff and the guys at MetaStock. Yes, we've been working together for a long time. I think we've come up with a really great product. Now, this is the second time I've demonstrated TraderMaker Pro on MetaStock, so it'll be interesting to see, because I'm going to pull up the chart that I used last time and show you how it's actually worked 3 weeks later within the markets. Now, I've got my own kind of style of trading, been involved in the markets for a long time, over a decade. The other part of my job and the other part of it, my interest in trading, are really kind of mentoring people and helping them through making the trading decisions and getting to grips with the markets. Now, I like technical analysis because it doesn't really matter what style of technical analysis you use. It all comes back, really, in my thinking, to the self-fulfilling prophecy. So you can have your own version of technical analysis and that works for you and how you interact with the markets, but you have to really be very aware of what everybody else in the markets is making their trading decisions and basing them on, and that's what brings the market sentiment and makes this self-fulfilling technical analysis prophecy come true. So TraderMaker Pro is designed to give you an insight in two ways. Firstly, what the market is thinking. So all the good things like RSI, MACD, stochastics, I tell you what the market's thinking. Resistance points, support points, again, I'll let you know where the market is aiming for the support and resistance to be found. Then within the charts, you get my indicators that only I use. So they're the bull, bear candles and the reversal points. Like I said, I've got a bit of a presentation I'll go through just about my mantra, my kind of views on the markets, how I approach things, a few basics about the software, and then as always, I'll do what I do best. I'll demonstrate the software live and we'll answer any questions that you guys might have. Now, there's a few popular misconceptions about trading. The first one is that professional traders know more than you. Now, they might have more experience, but trust me, I've met some traders that do not know more than you. The markets are controlled and manipulated. Again, another popular misconception. We do see heightened volatility, we do see big players in the markets, but without that liquidity, the markets would be no fun to trade. You have to hold positions for a long period to make money. Well, to make the most money you do, but certainly when you talk about the $4 trillion that's traded in the FX markets alone, there's a lot of money to be made every day in intraday trading. Trading's a good way to get rich quick. I think everybody who's here tonight can stand testament that trading is not a good way to get rich quick. Trading's hard. It's a marathon, not a sprint. Everyone reads charts the same way. As I said, the self-fulfilling prophecy of technical analysis is what we need to focus on. Understand what the market participants are thinking, and then put our own interpretations of that data into play. So trading's the same for everybody. 99% of the time, we've got access really to the same information. It's not like it was 10-15 years ago, where people like the turtle traders had a massive advantage by having the system and the great setups. You know, when I started trading 10 years ago, my desk fees were around about £2,500–3,000. I used to have Bloomberg, Reuters, Associated Press, you know, all the different trading systems. It was an expensive game. Right now, I trade in the same way for a fraction of the cost. So why is it so difficult if we all have access to the same information to make money out of trading? Well, there's no real mystery about trading. You buy low and you sell high. And it really is that simple. It's all the other things that complicate trading. It's the the sides of of your own brain fighting against you. It's really the psychological side that really bullies people into thinking that they're wrong when they're actually right. But realistically, when we break trading down, it just is my 80-20 rule. That 80% of the time the markets trade technically, 20% of the time we've got new fundamental news. However, a fundamental piece of information will move the market, but in a technical manner. So it's all part of the same thing. As I said, 4 trillion is traded every day in the FX markets alone. Well, there's money, okay? There has to be a strategy to profit, okay? And where there's money, there's an edge. So people will go to extraordinary lengths in order to get the best system, the best technique, the best way to take money and extract it from the markets. The thing I've found over the last, especially 4 years, when I've been mentoring some, quite a lot of traders in my webinars and seminars, is that most people don't have a sustainable strategy. They turn the screens on, they do a little bit of charting, they play around, and then they're straight in the markets. Now, you have to have that little bit of preparation in order to be a good trader. And again, having developed TraderMaker Pro, it does a lot of this work for you. So you can spend more time focusing on the actual trades themselves, making sure you get the right entry point and hold it, more importantly, to the best exit point. Yeah, and all the things that my charts, my expert commentary, and the indicators are designed to do is be a time saver. So you don't have to go through the markets, chart by chart, setting out support and resistance. It's already done for you. Now, that's a great thing about computer systems these days and programming. It does a lot of the donkey work, a lot of the boring work. It doesn't mean you can't then go in and put your own flair and your own technical analysis around these things. It's meant to be a time saver. And again, it's showing you what the market thinks, what I think, then it's down to you to put the trade on. So every trade you put on using TraderMaker Pro will be your own trade. And that's the only way you can survive in trading. There's no point looking at somebody else's strategy and trying to make it your own. So how do you use TraderMaker Pro to gain a good, solid strategy? So not only have traded myself, I've also mentored a lot of top city traders. So I haven't just seen the good, I've seen a lot of the bad. Now for me, when you're trading, it's quite easy to spot a bad strategy. So there's a lot of things that I've put into TraderMaker Pro that are just wrong, that they're just right. They just aren't wrong. Plenty of time people like to overcomplicate technical analysis, make the charts much too complicated. And what I've designed all my systems over the years to do is strip out the noise, strip out the confusion and the conflicting indicators, and show you a clear picture. So the expert commentary is probably the main part of what you're going to use when you open up TraderMaker Pro. Now this again is all the support resistance, the Fibonacci levels, the RSI, the MACD stochastics, all the information that I think you need to look at that the market will be focusing on is in this window. Okay, so it is a really good, solid way of understanding a snapshot of that particular screen, that particular product you're looking at in one easy to use window. You're going to get the benefit of overextending markets. I'm a massive fan of Fibonacci. It's the reason why your foot is the same size as your forearm. It happens in nature. It happens in the markets. And the overextending markets and the fib levels revolving around that key 50% is one of the best strategies I've ever used, ever. Bar none. Okay, so when the markets break out and you get these alerts and you see the fib levels, this is where it's time to make some money. In chart signals, again, there'll be lots of bull, bear, and reversal arrows. And not too many. Again, all the kind of the things I've designed and indicators I've designed to pop up. You don't get a signal every candle, every bar. You're designed to get the signals when the market reaches the extremes. And I'll go through some live examples and in the charts and show you where the entry points were. Now, the majority of my charting revolves around the H1, the hourly chart, because that gives you enough time to get in, get out of a trade, to build a good, solid decision. Another problem, another main area that I've had to work on with traders over the years is using the right kind of time frames. Traders, especially intraday, assume that they have to look at tick data, minute charts. You don't. Okay, you have to look at the right kind of time frames, and especially the right kind of time frames in conjunction. And that for me generally revolves around the daily, hourly, and 15-minute for your entry points. Absolutely no point looking at too small a time frame. You're going to get too many conflicting signals, and generally the majority of people here will be trading off a spread betting platform, so you can never get the price you want anyway. We don't have direct market access, we're not market makers. So looking at that slightly bigger picture will allow us to fade out that initial volatility and stay in trades longer, and that is what's going to make you overall a more profitable trader. We have another little signal called the bull bear that is in the charts. Now, as I say, everything outside of the charts, what the market knows, these are kind of inside the charts, but just at the bottom. This is the sentiment of the market. Now, this will be explained a bit better when I go through the charts. But again, if you're looking for the basics of if the majority of people are buying and selling within the market, this is what you have to look at. And then you'll start to see how these things work, then how my indicators overlay, and how really, by looking at the markets in this way, it almost becomes transparent. Okay, because once you know what everyone else is doing, all you've got to do is rely on yourself for your entries and exits. Then we have the one of the great features of MetaStock, and that is the explorations. So all the indicators that I know work, the bull bear reversal, the bull bear candle, the Bollinger Band touch and breaks, they can all be searched for by using the Power Console. So instead of trawling through all the charts yourself, you put this simple search on. You can save a list of your favorite products, or just select them through the actual Power Console themselves, and you can start to see, where the key reversals in the market will be. So these are the kind of tools that only computers can do, and this is why we have to use systems in order to give ourselves the greatest edge and give ourselves the most free time in order to trade. We also have a series of alerts. So the alerts can be turned on, turned off. So when you have your screens open, all the things I think are important, the Bollinger Band touch breaks, the bull bear candles, which I'll explain in more detail when we're going through the charts, and the bull bear reversals. These are all the key things I'm looking for. So if you want to pretty much ignore what the rest of the market's thinking and just look at what I'm thinking as a professional trader, then you can just search for these criteria and they'll pop up on your chart, and you'll be able to see in real time when the market is getting to them extremes, and we're looking for them key bull bear candles, which again are a good signal of the market's doing. But the really important ones are the reversals, and I'm looking at my charts right now, and I can see a great example I'm going to show you in the Japanese yen versus the CAD. Now the layouts. Now there's 17 layouts you get with TraderMaker Pro. Now these vary from using the expert commentary with a setup to overviews of markets to your weekly, monthly and daily chart setups. Now all my indicators work on different time frames. Okay, so it doesn't matter what time frame you select, my indicators will work. What I'll say is that from the hour onwards, the signals become a lot stronger. As I explained earlier on, below the hourly chart, you get a lot of conflicting signals and a lot more noise. So personally, I would run the majority of my indicators on the hourly and above. Then you'll get them clear-cut reversals, them clear-cut indicators that tell you there's more bull or bears in the market at that period. And obviously, the higher up the time frame you go, the more extremes and the bigger moves you're going to be looking for. So pretty much that in a nutshell is what we're going to go through when we talk in the live trading scenario. Now the markets, I'm not going to do a live trade now. It's not designed to be that session. It's more of a live demonstration. But this is really the system in its entirety. Okay, so if you want to go through all these things individually, what we'll do is we'll do that now, and any questions you have, just put them on the chat window. So I just ask Jeff now to allow me to share my screen, and I will go on to the MetaStock platform. Okay, just give me a second, guys. Magic. Okay, can you hear me now, guys? Can you hear me now? Yes, okay, that's half the battle. Can you see the screens, however? Can you see my my MetaStock? Yes. Brilliant. Well, look at that. The powers of modern technology. Okay, guys. Well, this is the single chart view. Now, what we have when we open up MetaStock, sorry, is our layouts. So we have a series of these layouts that allow us to open up the charts and open up my commentary with one product, with 4 products, or open up on the different time frames I've just said. Now, it sounds quite simple and easy to have done 17 layouts. I tell you right now, it is not. Okay, it is not easy in the slightest to put this level of consistency together. Now, this is 10 years of experience, so I'll put all the things I know correlate inversely and directly together, and I'll put all the things together that I know you should look at. So the single product view is down to you. You can click any product you want and then have the expert commentary open. You can have 4 products, which I recommend you use, because it's always better to look at 4 correlating things than it's just one single product. Then the rest of the things are down to your own discretion. You can look at monthly commodities, you can look at weekly commodities, daily indices. As I said, all these things are set up with my indicators already running, so the hard work is done for you. All you have to do is double click and you'll be able to see what the monthly commodities are doing with all my signals already set up. So what we've got now, the reason why I'm using this particular Japanese yen versus the CAD chart is this is the chart that I used in my last presentation. Okay, now the reason why I didn't change this for this particular webinar was just to illustrate what I told people 3 weeks ago. Now, what you can see is that you've got the charts open. Now, as I said to you, everything outside is what the market knows. So these support levels are what the market are looking for in terms of support. Now, if you see a 0.0, that just means there isn't a 4th point of relevance on this time frame. So all this information will change depending on what time frame you're using. So we're on the hourly, so we can go to the daily, weekly and monthly, and all these levels will change depending on the time frame. So what I like to do is we'll just start off this way. So go to the dailies, let the data run up. Now this is again the daily signals. Okay, so my indicators are running, and from a bull bear perspective, that's how many bulls or bears are in that particular candle on the days are illustrated, but it's the reversals you want to look for. Now, okay, the reversals don't look so great here because the market's aggressively selling off. That's where you've got to tie in your fundamental information. But when we start trading technically, bang, we see the big swing. Bull, swing, reversal, swing, bull, swing. Okay, so we're looking for right now the market's in a bearish sentiment. So what we'll do is we'll go on the hourly chart and see how we can trade from that in a minute. But as you scroll through the different time frames of daily, weekly, you're going to get lesser signals the higher up the time frames you go, because obviously you're getting more of the extremes. So the bear signal here, very, very nice. Reversal here. Okay, again, a good trade. The bulls are back in, so 3 bulls now. If we don't really break these resistance points and get back into this range here, this market's going down. So we go back to the hourlies, is where I'm most comfortable. So if you ever see the market do this or the chart do this, just rescale the y-axis. Okay, now the reason why we've got these lines on is from the previous webinar. What I did is I went through the monthly, I went through the daily and the weekly, and I put all the points of interest from here, okay, into the chart. So what I did is it's very, very simple to do. You highlight the particular level that you want, press Ctrl C, put a line in, right click on the line, and then just paste it in. Okay, it didn't work. Ctrl C, so double click. Oh, okay, well, it did work before. Okay, well, what we have to do is either copy and paste it in, or just actually type it in ourselves. It's not that too laborious. So once we've figured out what time frames are going to be of interest to us, what I generally do is pick out 2 key levels of support, 2 key levels of resistance on the weekly, on the daily, and then I transpose them onto the hourly chart. And that gives you the framework of where the market's going to move to. Then you'd use these smaller time frame for either your entry or kind of to give you a directional push into where the market's going to go. So as I say, all these things are what the market are looking for. These are key support resistance based upon different criteria that I've programmed into this system to make sure that it catches enough of the particular sentiment of the market. A lot of people then will look at the RSI, MACD, stochastic and other oscillators. Now instead of putting the numbers up of what they are, I've simply transposed them into what I know people class them as. So RSI across the board, you know, the intradays, the hourly, then we've got the D1, week one and monthly is all neutral. The MACD we're just creeping into the buy for the intraday sentiment. However, the rest is sell, and then the stochastics, you know, the intraday sell and the rest is neutral. So the majority of these things are saying, although the market's going up, the majority of market participants are reading the oscillators as, you know, there's a sell throughout the different time frames. So you get the support and you get the sentiment. Now coming into the actual chart itself, this particular bar down here is the bullish or bearish sentiment. So this pays and mirrors really what I'm thinking. So this is what the market thinks. Okay, we're bullish, we're bearish, we're bullish. This is what I think. Okay, so when we see this particular part, I believe that when we hit this dotted line here, which is a previous point of support and resistance, yeah, that we got from this particular expert commentary window, so we put that in. So back here we were trading up here. So when the bears come in, okay, and the market then pushes down, it hits this level. We have a little bounce off support here, but really when the market targets this level here and the bears come in, we see a natural sell-off. So you can have a very, very nice trade to sell through all these levels of support and resistance all the way down to this red line. This was another key point of support and resistance, you know, again, that we took from the expert commentary window. Market moves down, then we get a nice signal saying the market's due to reverse to get out. So that basically is just the hourly signals, okay, that I give you on the chart for more bears than bulls being in the particular market at that time. Now the other thing to remember is that the bull and bear indicators are not the strongest indicator on TraderMaker Pro. They're just an indication of what I think. So what you have to look out for is when the market turns bullish, but I think it's bearish. Although we go down all the way here and push the market down, we can't close lower. We close above this level of support. Yeah, so the bears are all pushed out of the market and then we move higher. So what the bull bear signals are meant to do is to tell you that, yes, I think that it's a bearish signal or a bullish signal, but be careful when you go against the market sentiment. The market's generally going to win because there's more people in the market, you know, buying and selling than just my size alone. So be very, very careful when you see, you know, the bull bear signals, because when they do work, that's great. They generally tie up with the market sentiment. But if the market's bullish and I'm bearish, well, I'm right for a short amount of time, you know, because the market pushes down. But when the bulls kick back in, they push all the bears out, and then we make some new highs and back up to these key levels of resistance. So all these levels that we drew in weeks ago have attraction within the market. Support, resistance. Okay, support, resistance. We go all the way back up. So we've got bears creeping back into the market. So realistically, if we can't turn green and get the market to push back up, then this market is going to go down. So I've got somebody saying that there's a little bit of an echo from Nilesh. Yes, sometimes there can be a little bit of echo on these web-based programs, I'm afraid. Ian, good to see you. One of my usual followers is in the room, and it's fine for him, so good to see you tonight, Ian. So that is the single commentary view of the markets. Now again, you should hopefully all know how to use MetaStock, so you can zoom in to kind of make this a little bit clearer. You can see the volume, you can see how these tops and these bottoms work, but I don't think anybody can deny that there's no mystery and there's no I haven't manipulated these charts. If you watch the previous webinar that I uploaded onto MetaStock about 3 weeks back, all these lines will be in the same place. So I drew these lines in for all the people who were watching then, and I purposely opened the chart now to say that when we come through, the market has a memory. So the market found this point here as a good point of support and resistance, couldn't break below it. We know when we see the long wick in a candle that it's generally a fake out. Okay, so when the market closes above that, the bear signal is clearly wrong, market moves up. So in this point here, these blue candles, we would have got some Fibonacci levels, okay, because that's a Fibonacci sequence, and then the market then continues to make highs, but all these dotted lines are of interest within the market. Okay, so if you get long here, you get out here, or you can get out and be brave, wait till here. So bears come back into the market, we only have a short-term trade, but again, it's still a clear signal. 1, 2, 3, 4 hours of selling after this is printed. So it doesn't matter if you get involved in this candle. Yeah, you only have to hold the trade for 2 hours, and you've still made money out of that signal. So again, guys, it's down to you how you use it. Remember, everything in the expert commentary is what the market knows, sentiment-based and support and resistance-based. This is what the market sentiment is, bullish or bearish, i.e. there's more buyers than sellers, sellers than buyers. And then all the dotted lines are what you drag in, okay, from the expert commentary, and all the indicators, bull, bear, and reversals are what I personally use. So that's a good example of how you would just trade off one particular chart. So whatever your favorite product is, all we do is select it from the usual way in MetaStock. And then once you right click, if the expert advisor isn't attached, you attach the expert advisor, and all my information will be attached. Now sometimes the expert commentary window might not pop up, so if you do want to see that, all you have to do is when you see the colored candles and the bull and bears, you know the expert is running, so you just go to view, expert commentary, and that'll pop back up. Okay, so we'll just close that. So going back to the other templates we've got, for product commentary, again, it's just exactly the same, but in this respect what we're doing is we're focusing on 4 products. So let's give this a few seconds to load up. Okay. Can have a few problems. If you've ever used MetaStock before, you know that sometimes they don't always open first time. Okay. Okay, well that doesn't seem to be loading up, but basically that'll just show you that your 4 favorite products that you like to trade. Again, what you do is you just either select them from the normal way here. Okay, it's just popping up now, so let me just get rid of these alerts. Okay, so I mean, again, if you've got to trade in the 4 products, then generally I pick 4 products that I trade on a regular basis. So I generally have the S&P up because I think that is the biggest, broadest measure of what the economy is doing. Then we've got, and again, remember the US still sets the tone for the rest of the world. So if the US market's going up, it's generally going to drag the rest of the markets up. So we've got the FTSE, we've got the S&P, we had some Euro stocks down here for whatever reason. We can't load it, and the euro dollar up here. It doesn't matter. They're not loaded. I can show you enough from the charts that we've got open. So again, the 4 product view for me. If you want to just look at what the market's doing, you've got your expert commentary open. So again, you know the principles. Everything the market thinks is here. All the key resistance and support. And you go back to your chart and you just look. You look for what my signals are trying to tell you. So we'll just zoom in and just take some examples. Okay. So more bulls than bears in the market here. Okay, market red. That's a big move. That's a big up move in the FTSE. Again, bull, but we're coming towards the end of. It just looks like the market's running out of steam. So the market then says it's a bull, but remember, as I said, we're in the bearish territory here. So all the bulls then get squeezed out of the market. The bearish sentiment of the market, the overall sentiment takes over, and the market comes down. But again, a nice clean signal. If you look at the S&P, again, look at that for a key reversal. Brilliant, brilliant signal on the hourlies. Market, again, we see this nice, big, solid up move. These blue candles indicate that you will have seen a Fibonacci set of support and resistance here. So when we hit the top part of the Fibonacci, we see the reversal, good part to sell. 1, 2, 3, 4, 5, 6 Okay, 6 selling candles off the back of that one reverse on the hourly signals. Okay, then the market comes back up. You see the bull, so you can either get out your position and turn and reverse. So you can make almost double on the trade just by these 2 hourly signals alone. And the whole point is, like I said, there's no point whatsoever in being able to get into a trade if you can't get out of a trade. So you might get into this trade and get out, you know, for some small profit down here. But the great part of this system is it doesn't just tell you the reversals, it tells you the exit points as well. So you get in on the reversal at the top of the range, then you look for a reversal at the bottom or a corresponding bull signal to tell you the bulls are returning back into the market. So the bulls are back in the market, as we can see indicated here. I'm saying the bulls are back in the market, so you liquidate your short position, you maybe even then turn and reverse and go long, market goes up. Now, I don't think anybody can argue that that is a good signal. So this is what you're going to get, okay? You're going to get these type of signals on any time frame and can be overlaid on any product you choose. So it doesn't matter if you're a forex trader, if you're an indices trader, a commodities trader. You know, I'm just dealing with what the market thinks from a technical perspective, yeah, what I think from a technical perspective, marrying the two up. And as I said, that's 80% of trading is that technical side. So the 20% of the fundamentals is down to you, listening for what the market, you know, maybe listening to in respect to, you know, world events or listening to any economic data, tying that up together and then making the trade. But when you've got signals like this, I don't think anybody can deny that you've got a good chance of getting on the back of a move, and also, very, very important for me, you've got a good chance of getting out of the move and maintaining and holding you know, a significant amount of your profit. Because absolutely no point going short here, then forgetting about the trade. By the time you come back 7 or 8 hours later, the market's trading back up here, because all that is missed opportunity. You've missed the opportunity to get out for profit, then also see the signal where the bulls are back, get long, get your profit out, and then turn and reverse. Okay, you don't have to. You've made your money in this. But again, one of these things you have to learn when you're trading the markets is take these key opportunities when you can. Okay, because you don't see any signals after these 2 signals for quite some time on the hourlies. So you need to make sure you bank your money from these 2 trades here, then wait for the next key signal. And that's why you don't see lots of arrows on my charts, you don't see lots of lines, you don't see lots of noise. What I tell you is what works. So when arrows come on the screen, tie them up with the market sentiment down here. When the bulls are in town, Steve said the bulls are in town, you buy that market. And then it's down to you where you get your profit out. Okay, so we can go through some other of these layouts just to show you what I mean. Let's pick some dailies. Now I like the dailies. Let's pick some daily. Where have we got listed down? Yeah, let's try some FX. So we don't need the market commentary window for this one, because these are daily signals. Now, again, I said my whole point, my philosophy of trading the markets is using all time frames. So when people often ask me, you know, Steve, what time frames do you use? Well, I say I use them all. So you use them in different ways. Now, I've just scrolled through the hourlies and showed you quite comprehensively how the hourly signals work. But what you have to do is sometimes take a step back and look for the bigger picture. That comes from your daily, weekly, monthly charts. Now, the final thing I'll show you after this is how you mishmash all these time frames together. But right now, we're just going to look on the dailies, because the dailies can give you an indication of what's going to happen in the next few days of trading. When we go above dailies to the weeklies and monthlies, we're generally talking about people who position trade, okay, that have to hold overnight positions to get the most of the moves. So dailies are still of use intraday trading, and the weekly and monthly levels that we use, again, we get them from the expert commentary window, but then put them onto our daily or hourly chart, so we get that framework. Yes, Peter, this is going to be recorded so you can review. And Jerome, yes, I mean, I tend to use stops sometimes, but it depends on the trade. I mean, to be honest, I trade smaller size to be able to build into positions intraday. So rather than have a finite stop, I'll trade smaller size and build into a position over a number of prices. There's 2 reasons for this. The markets are quite volatile right now, so if you use smaller size, you can use a wider stop or no stop at all, then averaging at different prices to spread out that risk. And secondly, I generally only trade at the extremes of the markets, so I'm not trading 5, 10, 15 times a day. I might put 1 trade on a day. So I'll cycle through all my charts, look for the best one, look for the best signal, and trade that. So I know the edge is with me, that I'm trading at the extremes of the market. So we can cycle through some of these daily signals quite easily. Again, we have the same principles, the bull bear, of what the main strength of the market is, and then my signals. So some great reversals here. Okay, reversal on a bull next to each other, market goes up all the way to the bear, carries on to that key reversal down here. So that's a great trade in the US dollar versus the Aussie dollar. Bear signals, get out for a bull. Key reversal here in the dollar versus the euro. I mean, again, you can just see so many good opportunities. So what I generally do is when you open up the screens, just zoom up and make the charts look a bit tidier. Because when we generally open up, we open up on a slightly zoomed out view. What we want to do is kind of figure out what's happening on the here and now. So just quickly cycle through the charts. Just click on the plus magnify arrow. Very, very easy to use in MetaStock. And here we have, again, bear come into the market. So that day, we're going to be looking for, because remember, the bear and bull signals are for that candle. So in this candle, I'm saying there's going to be more bears than there are bulls. Market sentiment bearish, market comes down. Bullish, ties up with the bulls, market goes up. Bears, bearish sentiment, 1, 2, 3, 4 days of selling. So you don't have to be a long-term trader to make money out of that, but if you are a longer-term trader and hold overnights, when you see the bear signal, you get in, and then 3 days later, you're significantly lower. Bear signal will match up with the bears. I mean, what you want to do is kind of tie in sometimes where I've got a bull or bear signal, and it's different from the market, because that's when you're going to get the really big intraday moves. That if I'm calling there's more bears in the market than bulls, but we're in a heavily bearish red section, then you're going to see a lot of people squeezed out of positions. So again, it's down to you see, how you interact with my system and understand what time frames you use. I would say if you are an intraday trader, that it's the 15-minute, hourly and dailies that are going to make you the best entry and exit points. But if you're a longer-term trader, maybe you want to look at the dailies, maybe you want to look at the weeklies, the monthlies. Again, if I just close this chart, this layout down, and open up some monthlies, what you're going to see is some absolute tops and bottoms. So just all we have to do is go to the FX. Let's try some commodities this time. So monthly commodities. Yeah, I might have a slight delay in this because obviously the monthlies contain a lot of data. Yeah, I thought I was taking a chance with that one, to be honest. Let's just see the FX, because they're still trading, open up. Okay, so we can see in the euro dollar, again, these are monthly candles, so these are the absolute extremes. Bears, okay, just coming to the end of the bullish, so there's still a bullish sentiment in the market. Bears come into the market, so you've got 1-2 months of selling, okay, and then we finally come into the bearish point, but the market actually reverses. But it doesn't matter. If you've got on the back of this move anywhere and you've held it for a month, you've made money. Okay, so it doesn't look like these charts are going to kick in. We might have to wait a little bit of time for that. So time is pressing on, so I'm not going to wait for them to load up. What I will show you now is the old time frame way of trading. So I'll just close these down. So the old time frame trading is right at the bottom. So you've got all the way down to your hourly signals, your daily, weekly, monthly, all the different things with my particular arrows and my expert commentary. My expert commentary will only included in these two. If you want to open the expert commentary, you have to open it manually yourself, but then it will interrupt your charts, but that's fine. So you have the single view or the 4-product view. The rest of the indicators and the rest of the layouts show my monthly commodities, indices, FX, again, then down to the weeklies, daily and the hourlies. So everything is set up for you. So once the charts pop up, there's very little you have to do apart from trade. So my trade setup, okay, I'm just going to show an example of the S&P right now. Okay, so this would be how I would trade the markets personally from my perspective. Okay, so good. We've got the market opened up. So what we're seeing now is the same product on 4 different time views. So again, we want to see the expert commentary for this. So as we cycle through the expert commentary, hourly, Yeah, daily, all these things change to tell you the different support and resistance and the sentiments. Okay, then we've got the monthly and the weekly. So this is more of an illustration. I would probably use 3 charts, as in the daily, the hourly, and the 15 minutes. But this is just a good demonstration tool of how the charts work. So monthly. Okay, top left is monthly, the biggest view we're going to see. So we see the bull run start, and we see nothing but market sentiment saying bullish. Okay, so remember, the highest time frame I ever go for is monthly. We've seen a bull here back in 2002. We've seen no reversal and no bears on the monthly. So why is anybody selling the S&P yet? We haven't had a signal. Look on the weeklies below it. We might get a clue from that. Okay, so on the weeklies, slightly different. So all these, remember, monthly candles are made up of weekly candles, daily candles. Weekly candles are made up of daily candles. Daily candles are made up of hourlies. It's all the same thing. So on the weeklies, again, we see a bit more of a mixed pattern. But we see the bullish, the bearish sentiment squeezed out of the market. Bulls come back in. Big bull run. Market comes up. Reversal. Great place to take your profit. So 1, 2, 3, 4, 5, 6, 7 weeks you can hold that trade before you get the reversal signal. You've made all that money. I think you can all agree that's a good trade. So the bull sentiment has come back into the market. We know again a great reversal candle here on the weeklies. You know, that's a great hammer at the bottom of these 2 down candles. Bulls are back in the market. Okay, from my perspective, bulls are back in the market from the market's perspective. S&P is going to make new highs. Simple as that. Okay, then going to the dailies, we're zooming in now. We're getting more ways that we can get involved because we've missed all this now. But on the dailies, we can still get involved. Okay, what did the daily start showing us? Plenty of bulls around, guys. Bulls, bullish, market goes up. Bulls, okay, bit of a fake out here. We don't quite make it. This isn't a 100% system, guys. And I'm not going to give you, a system that's going to be right all the time. Sometimes, things are just overextended, or there's fundamentals in the market, or they just can't work. But I think I've shown enough examples of where we have worked. Okay, market then sells off, and remember, the bull sentiment is here. We've kind of got a bit of indecision. We've still got some sellers and some buyers. We haven't seen any big bullish market sentiment here. So that just means that the bulls are getting squeezed out of the market here, and once they're wrong, bang, the market on the daily sells off aggressively. Yeah, back into the bearish sentiment. However, that remains. Bulls come back into the market here, ties in the green. Bulls are then brought back in, so we don't see much of a reversal. Again, that's a daily signal. So that's just telling you that for the next 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 days, the market's gone up. So we've seen another bull signal. So maybe the market for the next 15 days is going to go up. We've seen a few down days here, but it's not to say that we won't be looking for some dip buying opportunities. If you want to find them, well then just pick some resistance points from here. Pick some resistance and support points, put them onto your daily chart. When you hit them, then buy back. Then we go to the hourlies. Then hourlies again is something you can make your trading decisions from. Bulls come into the market, market comes back down, bang, bear signal, you're out. Bulls, buy the market. Reversal, don't think anybody can deny that's a great signal. Bulls come back into the market, you get out, and as I said in the previous example, you can turn and reverse. So this is trading over the last few days. So if you'd have had TraderMaker Pro, then I don't know if you were trading the S&P or not, but you'll have some good opportunities to buy and some good opportunities to sell. So again, what I would say is drag these resistance and support lines onto your hourly charts and then take them. So if you're using a view like this, your daily resistance, so we can see one spot 737 spot 92, that's a big level because it comes up 4 different times in 4 different colors. So copy that, put it onto your hourly chart. So you've only got 2 levels of support on your dailies. Resistance, they're all the same. Okay, we've got 2 levels. So put them 2 levels onto your hourly. You don't necessarily have to do that with your weeklies and monthlies as well, but if you do, then you can see there's only really 2 levels on the daily charts you have to pay any focus to. On the monthly chart, yeah, same again, there's only 2, actually there's only 3 levels. There's key resistance, that's the only level of interest, okay, resistance. Then there's 2 points of support on the monthly, so put them onto your hourly. And then you go onto your weekly, again, 1 level, there's only 2 levels on the weekly. So of all that information, okay, that we've just clicked through, there's only actually 5, 6, 7 levels that have any interest on the higher time frames. So you can take a daily, weekly, monthly set of support and resistance, put 7 lines on your hourlies, and then just trade them around these signals. Okay, and that's how you use all time frame trading. Okay, you're building your framework of what all these signals and charts are telling you, and the support and resistance is telling you, dragging it onto your intraday charts, and then they are your entry and exit points. Okay, where the market is looking for the extremes, then you use my short-term signals in order to get in the trade. So I can't really kind of simplify it any more than that. I've given you the what the market's thinking through the commentary window. I've given you the sentiment of the market in this bottom bull or bearish sentiment bar here. I've given you my signals when there's more bulls or bears in that candle, be it on any time frame. Okay, from my perspective, then the key reversals, and they're the real ones you want to look out for. These are the big signals. Okay, so it all should tie up together. Then it's all neatly packaged within these layouts, so you don't have to keep changing your MetaStock screens. You don't have to keep opening different charts. Okay, everything that you double click on from the layout will have my indicators attached, and if they're meant to, will have the commentary window. Okay, so it's all done for you. So it's all designed to save you time. It's all designed to take the mystery out of trading. And again, I would recommend that you use the single product with the commentary, the 4 product with the commentary, or just open up this window and trade the same product with maybe a daily, hourly, maybe 15-minute and 5-minute. And then you can start to see intraday how these signals work. But remember, your H1 hourly chart signals for me are always the strongest intraday. Now, buy, sell, buy, sell, buy. That's TraderMaker Pro in action right there in the S&P. So that would have paid for my monthly subscription in one trade alone, even if you're trading minimum size. Okay? Any questions on that, guys? Any questions or any thoughts? Do you start to see how TraderMaker Pro, it's not just a guidance system. It's meant to give you an idea of the market's thinking and also what I'm thinking. So you've got the market sentiment, which is very, very strong. Professional trader's view, which is obviously from vast experience, and then it's down to you how you use your own techniques and your own particular biases to get involved in the trades. And remember, it works on any time frame, on any product, so it doesn't matter if you're an FX commodities trader or the indices. These principles don't go out of fashion. Okay, they apply to anything that moves within a market. Any thoughts at all, guys? Any questions? Nothing from Ian. Have you got anything to say, Ian? You generally like to ask a question or two. Again, guys, just generally kind of when I'm talking through my webinars, it's a little bit different, this setup of MetaStock. I mean, I've done over 550 webinars now, so I've been doing these things for a long time. So I generally just go into Steve Ruffley mode and talk about what I'm passionate about, and it's great when I talk about these things. It's my system. I made it. I own it. It's not just talking about someone else's product or talking about what the markets are doing. This is my products, my actual strategies working within the charts in real time. So it's quite exciting for me to talk about these things. So I know there's a lot of information to take on board, and we do have a lot of information-based videos in order to use it, but it should be fairly self-explanatory that anything outside of the charts is the market, anything inside of the chart is Steve Ruffley. Ian, you've covered it very well. Excellent. Well, I'm glad to hear that, Ian. Dennis, all covered. George, do you trade in Indian stocks and indices? To be honest, no, not really. I generally stick to what I know, George, to be honest. So I like the fact that $4 trillion is traded in the FX markets every day. So I'll stick to the big ones like the euro dollar, the euro versus Japanese yen, maybe some Swiss-based currencies, because they're a good risk factor of where the fear in the market is. Then generally I'll trade a bit of gold, S&P and DAX. Is for me. So no, I generally stay out of the Indian stocks, to be honest. A little bit too emerging market, a little bit too volatile for me. Anything else, guys? Any other questions? Again, I think I haven't really looked through many other MetaStock add-ons, to be honest. I never do these kind of things. I never listen to any other presenters. I never try and compare myself to anybody else. You know, I do what I do because I enjoy it and I've got a passion for it, and I've done it for a long time. And you know, that's the reason why I'm the chief market strategist for InterTrader. That's the reason why my technical analysis is in Bloomberg, Reuters, and Financial Times. And I get my financial levels, what I'm quoted on, from my systems. So if you want to say, you know, how did Steve roughly get his level in gold, you know, or his levels in the S&P, it's by using these support and resistance levels and using it with my technical indicators. So you're not just getting, you know, good quality signals from a trader. You're getting institutional level things that are printed by huge publications. I mean, it's you get a lot for your money, guys. You know, what can I say? It's been a really interesting collaboration with MetaStock, and it's been a long journey. Don't get me wrong, but I think we've come up with something that really does benefit all users, because again, it is so easy to overlay in any time frame and any product, and it's designed to be simple. It's designed to be clutter free. It's designed to take all the noise out of the markets. So you won't see lots of flashing lines. You won't see lots of Ichimoku style clouds. You'll just see simple signals. Yeah, reversals, bulls, bears, key points of support and resistance. This is what you need to look at when you're trading the markets. Yes, absolutely, Jerome. Well, from my perspective, okay, the sentiment is, instead of having all the oscillators on your screen, now you can quite easily put RSI, MACD, stochastics, and your screen gets smaller and smaller, just so you can have a little wavy line. Instead of doing that as a bit of a space saver, and also the RSI has no relevance the majority of the time. It's generally in this neutral bias. Now the neutral bias is when it's not overbought and it's not oversold. So it's not overbought or oversold. What use is the RSI to you? So the RSI sentiment, now we're looking on the daily chart. So the daily, yeah, here is the first one you see. Okay, so the daily, well, let's click onto the hourly. So the intraday hourly is neutral on the RSI. It's also neutral on the daily, weekly, and monthly. For the MACD, yeah, it's a buy. For the stochastics, it's a sell on the hourly, but a buy for the higher time frames. So everybody who's trading, basing their decisions on overbought or oversold, MACD or stochastics, yeah, the majority of people are seeing it as a buy. So that works for you in one or two ways. If the market's going down, buyers are getting pushed out, so the markets will overextend and go down quicker. But if the market's gone down and it is looking to be at the end of a down cycle, maybe we hit some key support, one of these levels, and it's all still a buy, you can dip buy and buy that market up with confidence. Instead of putting the RSI at 52 or 53, it's classed as neutral because it's not in the overbought or oversold territories. When it's over them territories, yeah, it turns to a buy. When it's oversold, it turns to a buy. When it's oversold, sorry, when it's overbought, it turns to a sell. Because when the RSI is trading at 82, yeah, that's massively overbought. So that becomes a sell in the eyes of people that are trading off sentiment-based indicators. So tie that up with resistance, tie it up with one of my signals, and again, you've got three things already telling you what the market and what I'm thinking. Very, very powerful when you start to look at things this way. Okay, you start to think how you traded before, and instead of just going out putting random lines of support and resistance, you draw, you know, with just freehand. These are mathematically calculated from the different time frames. Okay, so that's why you will get them sometimes that they're the same. So we've got resistance 0, 1, and 2, 3 are the same. There is no fourth resistance because from where we're trading right now on this time frame, the market can't calculate any reasonable or logical point where the fourth resistance could be. So it's just 0. But when they tie up 3 and 4, that's when you know they're powerful. So at some time in the S&P, 1865 spot 4100, it's going to be a key bob, break or bounce level within the S&P. Okay, it has to be. These levels don't lie. Well, you see, and I could tell you what they're based upon, but I'd have to kill you, I'm afraid. You know, this is like KFC, isn't it? It's Steve Ruffley's secret recipe. If I told you the workings behind it, then it wouldn't be It wouldn't be, would it? It wouldn't be fair. But obviously, Ian, you've obviously watched me for years and years, and key things I use are higher time frame levels, points of attraction, Fibonacci, pivot points. But again, they're all based around different principles of RSI, Bollinger Bands. These things are mathematically and programmatically calculated. So for me to kind of spot these things and draw them in freehand, it'd be massively difficult. And that's why it took 8 months of working with MetaStock and my programmers in LA to be able to give you this system that all you have to do is put it onto a chart and it works. Okay, so I probably couldn't tell you that. Well, obviously I could because I made it, but for me to actually give that reversal signal freehand, just by, I'd have to probably overlay about 6 indicators on this chart to get that signal. Yeah, it made the chart look messy, and I'd have to draw them all on and then have to calculate it. Whereas the system, and again, remember, systems are there to be a time saver and to help you. That's what they do. So they just do all the millions of calculations on every time frame and every chart. Bang, there they are. Now, that's what computers were invented for, I think, to help us do the things that we know we want to do, but don't have the time manually to do. So for me, it's been a very interesting process, and I think the back end of MetaStock and the power consoles and the way that I've integrated my templates and my indicators, I think it's a perfect match. I think it's a great way for people of all levels to trade. And I've had people give me positive feedback, people saying they traded Facebook shares on it and held the trades for longer. So it doesn't matter what you trade or what your product is. It's all about using all time frame trading, the right kind of layouts, and Steve Ruffley's signals. Okay, these are what are going to make you the money. These are just what the market's going to do. Yeah, regardless of what I think, the market's going to move to these support and resistance levels, and the sentiment, it's going to be the sentiment. You might not be a sentiment trader, so you might choose to ignore that. But with support and resistance, you can't get away from, and you can't get away from bull goes up, bear goes down, bull goes up, reversal goes down, bear goes up. So I can't lie, I can't make these things up, can I? So there we go, guys. Well, that's pretty much time, I would say, for me, guys. I've been talking now for a good 45 minutes. Is there any final roundup questions? Anything Jeff would like to ask, or anything Jeff needs to say? Anything? Any final closing comments?
All right, good. That's awesome. That's helpful. Just a couple things I want to make sure we point out. The support and resistance lines are automatically calculated for 4 levels. The sentiment is automatically there. It's a very cool add-on. A lot of people are liking it, and those that are trying it are generally keeping it. What we want to do, it does have explorations, it has indicators, all that kind of stuff. The cost on this program is like $79 a month. And what I'd recommend that you do if you're interested in trying it out is get a hold of one of our sales guys. You can call them at 800-882-3045. And what we'll allow you to do is pay $80, which is 1 month, basically, and we will give you 2 months for free. So that basically will have you running until June 12th, 2014. So if you really, really think it's going to be beneficial for you, I mean, that's less than $1 a day to go ahead and try it out. And if it works for you and it helps you make money, then go ahead and keep it. And that's all I've got.
My pleasure.
So, Steve, great job. Thanks for coming in and doing this with us. And
hey guys, well, that's great. That's enough for me. So I'll wish you good luck in your trading, and you can always find me on Twitter at Steve Ruffley, and you've got the support of MetaStock and all their guys. So any questions, just put them through to them, and they will filter through to me. But thanks everyone for turning up, and it's been a pleasure. Good evening.